So I do something on a regular basis when I look at options. I do something I call sifting through the options. What I want to do is I want to sift through the cheapest and the most expensive options with you. I also want to sift through unusual calls and unusual puts. And finally, I want to sift through the highest volume options and the options with the highest open interest. There is a reason I want to look at all 6 of these, because I typically look for things that stand out, but I'm also looking for something else. I want to see if you can tell what that is. So let's start with the VIX. So the VIX is a market volatility index. What the VIX does is we take a look at the 500 stocks in the S&P, and we look at the market angst. We look at the options, the near-term options, and the options that are closest to the money. And what we do is we reverse engineer these, and we look at volatility of these options. Now, these are all put together to create the VIX, the market volatility index. And it is chartable, just like a stock, as you can see here. It has lows, it has highs. There is a saying that I learned decades ago when I worked at the American Stock Exchange. The American Stock Exchange, they used to say, when the VIX is low, it's time to go. When the VIX is high, it's time to buy. When I first heard that, I had no idea what that meant. And so I want to share that with you real quick. And I want to talk about what about now. So when the VIX is low, and when we talk about low as now under 20, when the VIX is under 20, this is considered a low point in the VIX. It means that volatility is very low. Greed could actually be high. When the VIX is low, it's time to go means that it's time to get out of stocks. Go, bye-bye, get out of the stock market. Maybe add puts to your portfolio, insurance, put insurance. Maybe sell off some profitable positions. Maybe hedge, okay? When the VIX is high, now what is considered high? Well, if anything below 20 is considered low, then anything above 40 is considered high. We were above 40. 1, 2, 3, 4. 4 days in the past week and a half, we were above 40. We've dropped now down below below 40. We're at 37. That's still considered relatively high. If we're using 30 as now a benchmark, if 30 is the middle. So when the VIX is high, it's time to buy. What does that mean? That means it's time to step in and look at buying. Buying what? Okay, so more as a longer-term trader or investor. I'll be transparent with you. Last week, I went in and bought SPY. I bought some SPY. And I bought SPY because of this chart right here. When we jumped above 50, I decided, hey, it's time to buy some SPY and add it to my investment portfolio. And I did. Typically, I don't time these things that well, but I happened to buy was it Monday or Tuesday, in the morning when the markets were lower. And then, of course, we had that turnaround. That doesn't happen all the time for a long-term investor, and I don't look for that to happen. But I do use the VIX as a timing indicator to look at longer-term trades. I also want to use the VIX to look at options, to look at trading opportunities. And I want to share with you 6 different reports that I look at for these opportunities. The first 2 are what are cheap and what are expensive. Now, something's expensive. What it means is that I'm looking at the 1 year, I call it the VIX of every stock. We look at the highs and we look at the lows of their 1 year volatility on their options, and we look at where are they now. So when I look at the expensive IV and I look at TMF, 77 is the high, 77.64 is the high for the last year, 32.08 is the low. When 77.64 is both the current and the high, then it means it's sitting on 1 year highs. There are a couple of things I want to mention here to you right off the bat that I see. I see GLD in here. Now, typically when I see a stock, then that means when I see a stock, it means that there may be an earnings report coming up for that stock. When I see GLD, IAU, FXE, TBT, there's a lot of ETFs that are on here that are trading at 1-year highs and implied volatility. That means that something's broken. That means that the overall market is getting heated. When GLD hits new highs and implied volatility, I'm long GLD. But if I'm long GLD options, I got to think about maybe stepping aside, because when all of a sudden we go from a 12, which was the low, to a 25, it means everybody's getting into gold. Everybody's getting into IAU. That's gold, a gold ETF. Everybody's getting into FXE. So everyone's buying euro dollars. Everyone's going short the bonds. And when I mean everyone, I mean the crowd, the options crowd. So expensive IV can mean two things. It can mean earnings are coming up, or it could mean something big, and something big is happening right now. And I believe when you look at gold and you look at the hedges against the stock market, we could be getting that signal we're looking for that we could get a flip. All right, second thing, cheap IV. When we see options that are cheap, that means that either A, earnings have just recently come, and all of a sudden what was unknown is now known, and there's a big exhale of volatility, or something's just not being looked at. When you look at Chewy, all right, when you look at MicroStrategy, when you look at Mara, okay, these are all drops in volatility, and they're not at their lows. You know, if you look at MicroStrategy, 205, 64, 69.99, and 93.26, it just means it's cheaper. It's one of the top 10 cheapest options, even though it's not as cheap as it's ever been. But when I look at DBA, that's the Deutsche Bank Agricultural Index. Agriculture is near its cheap end. Might be an interesting buying opportunity. Buying calls or buying puts? Yes. I know that might be confusing. It means that the calls and puts are both cheap. We'd want to do a little more research. I'll talk about that in a few minutes. But these are your cheapest options when I look at all of the optionable stocks. And it doesn't mean that they're static cheap. Just like the expensive ones do not mean they're static expensive. Get an idea, I'll show you what I mean. So if you take a look at the cheapest option on MicroStrategy, or even BitX, all right? It's cheap right now at 109.68, but that 109.68 is higher than anything else on the expensive side. I'm talking about where it is its 1-year range, not a static number. All right, next, unusually high volume, calls and puts. Here's our unusually high call option volume. Look at Alibaba, all right? Now, the way I look at this is I look at Baba, and I'm looking at, this is the December 19th, 2025, 125 calls. That's what that option tells me. It tells me that there's a lot of call option volume going on. Over 20,000 contracts that recently traded at $11.35. United Healthcare's on here too. Verizon's on here too. There's PDD, SMCI. That's Super Microcomputer. Gold, that is not GLD. That is that Barrick Gold? That's a gold company. JP Morgan. Robinhood's on here as well. Microsoft and Wells Fargo. All right. Again, if I were looking at Robinhood and I were saying, well, which Robinhood contract are we talking about here? Well, it is the April 25th, 2025, 47 calls. All right, $1.60 was the last price, over 3,500 contracts traded. This is unusually high because we don't typically see a lot of contracts trade in Robinhood, and all of a sudden, bang, we get this big number that shows up. All right, 31,588 on GOLD. Again, there could be some greed that's happening here, and a lot of folks are jumping in buying gold. But again, it might be also because gold was recently at all-time highs. Over on the put option side, and let me mention this as well. This doesn't mean that these were bought. It means they were traded. Someone had to sell the other side of this that believes that this is moving in the opposite direction of the buyer. Same thing on the put side. We see unusually high put option volume. We see AT&T. The May 16th, 2025 25 puts traded at 57 cents, 10,167 contracts traded, and this was the most recent price. It means that there was a buyer. It means that there was a seller. NVIDIA's on this list. That doesn't surprise me. Bank of America's on here as well. We're coming into earnings, and we know financials are reporting. Intel's on the list. It should be, because the price of Intel's just gone absolutely crazy in the last couple of weeks. Disney, Micron, and Apple round out the top 10 unusually high put option volume. And then finally, the last two lists I like to look at open interest, and I like to look at the highest option volume, period. Open interest, you got Intel, Walmart, NVIDIA. There's GOLD. Now, what's interesting is I see NVIDIA on here all the time. I see Tesla on here all the time. I see certain symbols that pop up quite a bit, but then I see the ones that I don't typically see. The GOLD, which shows up all of a sudden and is never there. And then over here, highest option volume, GOLD. This is a static number. This is interesting. Take a look at this. The January 16th, 2026 30 calls. Those are leaps. Traded at 62 cents, 31,588 contracts traded of this particular strike price. Alibaba I see on here quite a bit, NVIDIA, United Healthcare on and off, JP Morgan, Schlumberger, Apple's on here all the time, K-Web's on here all the time. But then, I'm looking for two things. I'm looking for things that don't belong, and I'm looking for something else. And you may have spotted it on here looking at these last two lists. Look at GOLD, the symbol. Look at GOLD, the symbol. Highest open interest was the January 16th 20 calls. Highest option volume was the January 16th 30 calls. Someone's trading a lot of GOLD, right? So when I say, what do these stocks have in common? GOLD, NVIDIA, Apple, Alibaba, Bank of America, Intel, JP Morgan, K-Web, PFE, AT&T, and United Healthcare. What do they all have in common? They all appeared on more than one of these lists. Expensive and cheap, unusual calls, unusual puts, high volume, and high open interest.